I guess I'll get started. So hello, everyone. My name is Martin Chera. My company is Express Capital Financing. We're real estate lenders. We specialize in fix and flips and buy and holds. We're nationwide. And the purpose of this webinar is just to share information, some best insight practices on how can investors buy properties, identify good properties, and get a good feeling of the real estate market. So this is just going to be like a one-on-one with me and John. Just some ground rules. This information is not to be taken, speak to your counsel, whether it's a lawyer or your accountant for any, information as far as your deals are concerned. This is just an informative information. If you have any questions, please put them in the Q&A on the bottom, and we will try our best to answer all of them after we finish. So I'd like to welcome Johnathan Boyle. His company is JMJ Group. They've been around for approximately 4 to 5 years, investing in real estate in New Jersey. They do a lot of fix and flips and buy and holds and some Airbnbs. I know John for quite a while right now, and he would like to just share some information to everybody on this webinar about the current conditions of the real estate market. So how you doing, John?
Yeah, hey, I'm doing all right. I really can't complain. Just busy day as always, right?
I hear you. I hear. We got to get to the grit and find those good deals out there, right?
Yes, that's for sure.
Awesome, awesome. So everybody's asking, like what's happening with the moratoriums, the foreclosures, and the eviction moratoriums. Is there any information that you could provide to us at least for the Jersey state?
To be honest, I know as far as the moratorium's concerned, that's that's a big concern for many investors, but that's where we see our opportunity when we purchase properties. In fact, I think probably at least half of the properties that we've purchased have had some sort of tenant who's been late on payments or something to that extent. So yes, the moratorium is an issue, but it's something that could actually also be an opportunity, at least in my eyes. But
Right.
I guess to answer your question, for the most part, you can't really evict anyone up until this January 2022, because one, the courts are really held up at the moment, and two, the big issue is that only they only look at certain cases at the moment.
Certain case, I believe Governor Murphy, the Jersey governor, postponed until, I heard until October. Not sure
Yeah,
what you heard out
something
there.
along those lines. But then I know I think it was something Governor Murphy said for if they're not making over 80% of what the median is or something along those lines.
Yeah. Right. Okay, good. Yeah, yes. The median income has to be 80% of the rental income. Correct.
Yeah.
So, okay, got it. So how are you finding, if you don't mind sharing, how are you finding properties or, sellers that are hurting, but they're not being foreclosed on from their lender?
It's kind of funny. So we have two different ways that we really find homeowners. One is our own cold calling that we have with our virtual assistants. They call probably 300 to 500 people per day at least, and we've gotten a few deals from them. And then the other is just from social media. I'm in a lot of the Facebook groups, and they always talk about, hey, I have this 5-unit, I have this 2-family, I have this single family. And, as long as the numbers make sense, I always type in, I'm interested. Here's my email.
Awesome. And these people that are cold calling, they're calling from a list that you're giving them, or is it just by zip code? Like, how you doing it?
So we give them different lists. So it, there's no magic to it, I guess you could say. It's just some lists we'll give them from list source. Some lists we get from Oprah requests for tax delinquents, others, code violations, just different sort of lists like that.
Got you. If you don't mind, John, I want to delve in. When the cold callers are calling, I'm sure you're taking over the call when somebody's interested. And as an investor myself, we're looking, me and you and other investors, we're looking for the pain points of that seller, of that owner, finding out what their pain points are, and hopefully identify it and fill their needs. Am I giving the right information out to these to the attendees?
I would say for the most part, yeah.
Right. So just for newbies out there, when he's cold calling, whether it's you or him, we're looking for sellers who are in distress, finding out their pain points and hopefully get them to where they need to be at, whether it's money or move to a different state or a different city or maybe a larger place or a smaller place. And if you can help them with that, then hopefully you can get some deals successful. Anything you'd like to share with our audience today on how to make deals happen or anything?
I mean, yeah, one of the big things I always do is I always look at the property as a whole, and I always look at what's the highest and best use for that said property. So like, for example, there's a property that we're buying that has a tenant in Newark, purchase price 220. It only needs maybe like 10K worth of work. Now there is a Section 8 tenant paying, I believe, 2,100 for the 3-bed, 2-bath home. And again, doing that 10K worth of work, it'd probably be worth about 350, 360 at minimum. So like in that scenario, highest and best use would be to pay cash for keys and then just do the late rent out and put it back on the market and sell it. Maybe make a quick 50, 60K, something along those lines after all expenses.
Right.
Now, if that doesn't work, where let's say the tenant refuses to move or whatever, then we speak to them and we just then we will do some light renovations to make it more livable. Then we'll talk to Section 8 once their lease is done. Hopefully we could get a more significant increase because it is a little bit below market, but it's fairly in line. I believe for a whole house, you could probably get about 2,400. So we'll see if we could push it. Some caseworkers are willing to help. Others depending on the Section 8 recipient, they may not. So then we'll just keep it as a rental and then do another cash out refi at 75% of what it's worth and pretty much get all our money back. And now it won't be a huge cash flowing asset, but we'll still, own the property, and down the line we may want to sell it.
Right.
So basically we always have like 2 or 3 exit strategies.
Right. And I'm happy you're mentioning 2 or 3 because you should never just have one because you need that second plan B and just in case something doesn't work out with plan A. And I'm just going to emphasize a little more, John, if it's okay with you. When you're owning a property, you're in control. You could do whatever you want with the property. You could refi, you could raise the rents, you could sell the property. So that's a good thing to know. And like John is mentioning, hopefully if you could raise the rents with Section 8 or if it's a personal regular tenant, that's fine. And if not, you're still in control. So when the rent is over, you could throw them out, evict them, or do whatever you want. So that's the good thing about owning properties. And to add to this also, I'm sure you know about the forced depreciation, John. 27 and a half years that everybody gets owning a property. It's guaranteed. The IRS allows you 27 and a half years. You divide the purchase price plus the property over 27 and a half years. And that equates to about 3.63%. And that's strictly cash flow extra to you. So that's an awesome thing. And also owning these properties, you under an entity, you're limiting your liability risk instead of going through conventional or an FHA, because you never want to have a property in your own name. Something happens to the property, somebody falls down, God forbid, another Surfside situation where the property collapses. You are that owner is responsible if they're doing it under their own name. So that's a good thing about owning properties under an entity. Okay, I mean, that's awesome to hear. So you're saying that investors should have 2 to 3 exit strategies. Got that, agree with that. And if it's plan 1 doesn't work, plan B, what would be the plan? What would be the plan 3? We know flip or keep, buy and hold. What would be is there a plan 3?
I mean, the third plan would probably kind of align a little bit more with some sort of creative strategy. But to be honest, it's highly unlikely in that scenario that we would even need to go there. You know,
Got it.
something probably
Sure.
along the lines with like owner financing would probably be a good strategy there. But again, I don't see the need to do that for this property, since the spread is there, and if we did keep it as a rental, the income is there as well.
Gotcha, gotcha. Okay. What do you typically, I mean, do you focus on half of flips and half of buy and holds, or is you have really one plan, and if it doesn't work out, I'll go with the buy and hold? Or do you do 50 of 50% of each?
So anything 2 units and above, we tend to try to keep, unless like we get something, like some miraculous offer that we just can't refuse. So, um, like single families, we tend to try to just flip them or wholesale them. So that's kind of like what our ideology is right now.
Got it. And what's your reason for the 2+ that you want to keep it? Is it the cash flow? Is it the value
Yeah, it's
add?
cash flow, and because New Jersey is such a high tax state, typically single families are very difficult to cash flow, if at all.
Right, right. And just to add to what you're saying, it's a great thing. When you have one tenant, you're either 100% occupied or 100% vacant. But if you got two of them, at least you could be 50-50. And of course, the odds are with you if it's 3 to 4, where you're more cash flow. I've got properties in the past where I had 4 units and 2 of them were cash flowing and 2 weren't, but it's still safe investment because I'm 50% occupied. So that's good to know also. Okay, is there anything else that you could share with us on maybe how to find properties right now? Because with this uncertainty, there's great opportunity. And I always tell all my clients and investors that this pandemic has created pre-foreclosures, foreclosures, tax liens, probates, short sales, all opportunities. How do we find these properties? How do we identify a good property?
I mean, if I'm not mistaken, the uh, the sheriff's sale is actually going to be coming back in September, I think.
Oh,
So
awesome.
I have to double check, but I remember seeing someone on one of my Facebook pages saying that. So like that's going to be definitely a big place where people can make money. Another thing is now you have another list that you could target, like because again, a lot of people haven't been paying their taxes. A lot of people haven't been paying their mortgages, and again, like the moratorium for mortgages is pretty much up at this point. So they're going a lot of people, maybe not a lot of people, but some people are going to be losing their homes. A lot of people are going to have to either refinance if they could, depending on the lender that they're speaking to. Because I know if you haven't been paying your mortgage, it's very difficult to refinance. Or they might just have to sell the property. So again, like that sheriff sale list, I would just go through that whole list, probably see if there's any way I could door knock it or get the information of the person that is actually there, like the owner. So that way I could give them a call and say, hey, I'm a local investor in the area. I'm just calling, people who own here in Belleville, New Jersey, whatever. Do you know anyone that's looking to sell their property? uh, I probably I wouldn't go direct and say, hey, I know you're about to lose your house. But, like the more subtle way where they might say, oh yeah, I have, I'm actually looking to sell or something along those lines.
Right. That's why I
So
said
that way they can
identify
save
their,
face.
I'm sorry, again, I'm sorry.
Yeah, no, so that way they could save face.
Right, right. Yeah, that's why I say always go in identifying their needs and their goals, what they're looking to do, and hopefully, as an investors, we could fill that need and that goal. Just to give somebody, some information, some public information. And the start of COVID, it was 4 million people in forbearance. The good thing is, there's only about 2 million people now in forbearance, so it's a 50% reduction. On, it's good for the people, bad for us as investors. And out of that 2 million, probably 1 million or maybe 700 or 800,000 will hit the actual, courthouses. That's just the prediction that I'm hearing in the real estate market. But the courthouses are opening up in certain counties in Jersey. I know certain of them are opened up already, like Bergen and Newark has opened up a little bit, but I believe that's 2019 and early 2020 listings. Am I correct?
I believe so, yes.
Yeah, because the banks can't foreclose, and even if they started to foreclose in October, November, it's not going to hit the courts till late 2022
Yeah,
anyway.
it's so backed up. You
Yeah,
like even if
got it.
they are losing their house now, they still have a couple years, in my opinion.
Right.
So Like at the end of the day, it just all depends on the homeowner though. Some might not know this information and still just want to get rid of it. So that way they don't have to deal with the stress.
Gotcha. Okay. And I'd just like to share some other information on how to find properties for the everybody out there. So like John said, there's a company called listsource.com. How does that, I know it's on my website, but how do they, what do they provide leads? You have to buy the leads?
Yeah, so they provide different leads. So like I don't know how they aggregate their data, but basically, if you're really looking for, let's say, someone who has like 80% of their mortgage paid, so that means they have 80% equity or so, like that, like they have that specific data point that you could actually put as something that you're looking for, maybe absentee owner or owner occupant, whatever you want to do. And like they have a lot of different data points that that you could like aggregate
Filter
from.
that you could filter in and get to your, yeah, it's good to know. Also on our website for the folks out there, Express Capital Financing, we have other affiliate partners such as REI Fax, REI.com, foreclosure.com. So we have good other websites out there that they've allowed us to put their information on our website, and you do get discounts. What I always tell investors, no property is going to come knocking down your door and say, hey, buy me, you're going to make 100 grand. You got to spend the money, you got to find it, you got to do your homework, and you got to make those calls, whatever it takes to do it. And just to share some other ideas, and I'm sure, John, you'll love this. I'm sure maybe even know this, Craigslist for the property owners who are embarrassed to put their for sale sign up maybe on the property,
Mhm.
or maybe they can't afford that 6% commission to the broker. So they're putting up their own signs, and these are real motivated sellers. So Craigslist could be a good way to do it. And even the opposite of Craigslist is even the renter section, going in and clicking on the renter section and telling that landlord, hey, I'm not looking to rent out your property, but if you're ever looking to sell your property, I'm a cash investor and I can, close in X amount of time and this, that, the other. So our affiliate partners, ListSource is great, PropertyShark.com, Realty Track. There's a great way to find properties. And again, these are pre-foreclosures, foreclosures, tax liens, probates, and all that. So we're just trying to share information how investors can find properties. Is there anything, John, that you could share with the audience about a typical deal, what to look out for, the positives, the negatives?
I mean, like one of the big things we always look out for here in Jersey is a tank underground. So you always want to make sure you do an oil tank sweep because you never know. Like even if the seller says that they've done a tank sweep, sometimes there's another one that may pop up that like the original tank sweeper didn't catch. So I always recommend that. There's actually a property that we're buying. So the owners, they removed the tank. So then we still did a tank sweep just in case, and found out there was another tank. And come to find out though, luckily, based off the survey, that it was the neighbor's tank. And funny thing though, that kind of sucks for them is last year like the neighbor bought that property and they did a tank sweep and didn't find anything. So now they realize they have a tank, but like their original tank sweep guy didn't find that.
Wow.
It was like so close to the property line, but then like we checked the survey and it's like, okay, here's the tank and here's the property line. So it's like, and this is our property that we're buying. So it's just like, oh wow, just missed our side. So that was good.
So which owner bought the property? The one next door or the
Yeah,
subject property?
so someone bought next door thinking there was no tank or anything because they got a tank sweep, but lo and behold, the person that they used must have missed it because they probably didn't go that far out.
Wow.
Because it's a weird location where this potential tank is. It's actually closer to our side of the property because like they have a double lot, the neighbor. But yeah, it's a little where the tank is kind of fun. Well, suspected tank. I really don't know or even really care because it's not on my side.
So it's not on your side. So your neighbor is responsible. It's his side from the survey.
Yeah. So,
Got it. Okay.
like, but the funny thing is that the neighbor, now they know, but they really don't care because they own the property. They're looking to live there forever. So they're not looking to sell.
So it's not going to affect you for your purchase.
No.
Beautiful. Okay. Gotcha. Okay. So yeah, there are many tanks, oil tanks underneath in Jersey. That's a very commonality. So you're saying do a tank sweep first. Okay. And let's assume the properties don't have a oil tank on there, or you take it out before or after closing. Anything else, any pitfalls or advice you can give our guests to look out for in a purchase?
I mean, I would just say, like, if you don't have experience with looking at the properties, I would definitely get like a home inspection or bring a reliable contractor with you. So that way, you, like, you feel a little bit more informed. Because, like, there's plenty of times where I miss a couple things still. But like Joey, since he's my partner and he's a contractor, he sees everything. So
He's looking at all the negatives. So just for the folks out there, John has a contractor as his partner. And so a contractor is going to look at all the negative, all the bad, so he could tell, his partner, John, what to look out for, which is good. And if you don't, hire a contractor. Great. I'm also correct. What are your thoughts on this, John? I'm also, if you're newbie, just the first few deals, hire legal counsel. They can protect you on the contracts until you're more informed and knowledgeable, where you can eventually do it on your own. Would you
oh
agree with
yes,
that?
definitely.
Okay.
You want someone who's investor friendly, because there's definitely a lot of little caveats depending on how experienced either if you're buying from a wholesaler. Some wholesalers will slip in a lot of little things that you may not see. So, like, there's been plenty of times last year where again, this goes to just negligence on my part, but like, for as far as the wholesaler agreed in his contract that the buyer would pay all the seller's closing costs. So then, of course, in our contract with the wholesaler, basically we're on the hook to pay for the seller's closing costs. And that's just like an added expense that, you might not, like, notice until
Right.
day of closing.
Right. I'm an advocate of hiring a lawyer, $1,000, $1,500. It's not money spent, it's money earned, because it'll save you in the long run. One different or wrong word or sentence can mess up your deal, your profits, your exit, and everything else too. So I definitely agree with that, John. You mentioned an inspector, and I'm happy you mentioning that, because just for the folks out there who don't know what that is, a home inspector will look at the property, look at everything inside. A good inspector, I should say, will look at everything, from the inside of the walls, termites, foundation, to make sure that it's a good property. And as a lender, I always ask my borrowers, are you getting an inspector or not? Because I like to feel comfortable with my borrowers. What are they doing and what are they not doing? So, and as an investor, don't be cheap on these things, on your lawyer and on your inspector. $1,000, $2,000 is not going to affect your ROI of $50,000, $60,000, $70,000. It's money saved and it's money earned better for a safer and clear exit and profits. So we got that. Okay, so we got the due diligence, we got the inspector, we got the you said the oil tank sweep. Anything else you could recommend for pitfalls going in to look out for?
You definitely want to, like, as far as the appraisal is concerned, when you're looking at a property that you want to fix and flip or whatever, you want to be conservative with, like, your after repair value. Like, if there's only one property, let's say, that's sold for 600, but everything else is selling at 5, that's similar, then you want to be, in the, like, ARV of 500. Like, I would much rather, like, be conservative in that aspect and then get surprisingly happy when my house sells at 6.
Right. No, totally
Then the
agree.
other way around, thinking it'll sell at 6 and then I sell it at 5.
Right, right. So
So
better to be conservative. If anything happens positive, it's gravy for you. And that's the right way to think as an investor, real estate mind. So that's an awesome information you're giving. Okay. So we discussed how to find properties. We gave our guests some ideas on how to find properties, some pitfalls to look out for. Now, when you're looking at a property and it's a flip, any positive notes that you could tell our guests what to look for, or what to look out for.
so in this market, like compared to last year, you needed to definitely do a lot more to sell a property. Like this year, if I'm not mistaken, there's probably like there 40 or 50, or there's probably like 50-60% less inventory than there was even last year when it comes to like how hot the summer market is. Meaning that like if there was, let's say hypothetically 50 properties in Elizabeth that were active at any time, now there is somewhere between 20 and 30, you know? So meaning that there are still the same amount of buyers, but a lot less inventory to compete for that. So basically, for example, we had a property we just sold in Elizabeth. We bought it for 167. Like the comps showed that it would easily sell for 250, like doing absolutely no work. But there was no property on the market for sale under 320 at all. So what we did was it was decently kept. We didn't do anything to it except stage the property, mow the lawn, and have some really clean pictures. And we put it on the market for 250, I think. Yeah, we put it on the market for 250. And we, even before the first open house, we accepted an offer for 275.
Wow.
Yeah.
Nice.
So not only that though, but the market's so hot that when there was inspection time, they asked us for like a page of stuff, and we just said no. and they were like, okay, and they accepted the property the way it was.
Yep.
So
Yeah, these realtors are getting smart too. They're underpricing it also, the listing, to have a pricing war also.
yeah, no.
So,
So like the thing was, we had like 3 backups pretty much at that price. So it was just like, well, you could lose the house. We don't care. You know, honestly, it's probably worth more at this point, you know, like with the way the market's been going. So that again, the market's really, really, really hot. So there's certain things that you don't have to do compared to last year. Like certain, like if it was like a 4-bed, 1-bath in certain townships, typically you would have had to add a second bath. But this year with you have to double check the inventory and what's been selling, but there's a good chance that you could probably get that same price without adding another bath in this market.
Got it. Okay. How are you finding the ARVs? Are they, let's say, because you're mentioning buy and hold, 6 months later, you're seasoning, you cash out. Are you finding that the ARV today is increasing 6 months later when you're cashing out, or it's still stable?
It's increasing, but we don't go by that. We go by what we calculated originally. Now, if it's higher than before, that's just more icing on the cake. Like I know our lake house, it appraised, I think it was in February for like 530, and we're looking at some comps now, and it's easily in the 6s. So we were expecting originally when we do our refi, in a couple months to be, maybe 530 to 550 range. But now I have a very strong case that it'll be in the 6s. And the way that the way that refis are getting really competitive, you could get like a 30-year loan, no doc at under 5, if like with like 75% LTV, which is insane right now.
Yeah, I mean, I'm offering right now 75 LTV on a refi, and the rate's in the mid 3s, very low 4s. So it could be done. And by the way, for investors that are new or even savvy, the Light Doc is the great program because you don't need tax returns, W-2s, or income verification. You could utilize it many times over with us non-bank lenders. So that's a good thing to know also for the investors out there. So where do you feel in your perspective the markets, is it going to shift in the next 6 months to a year to to a, I'm not gonna say a crash because I don't think a crash is going to happen, but what's your mindset on where the market's going to be in the next 6 to 12 months?
I mean, we're seeing it a little bit, but like there's starting to be more inventory, but it's still not even up to last year's levels. So honestly, I think that, like with the, the influx of properties coming in, it'll probably just slow the prices from going up, like let's say 30% in like 1 year to maybe like a 4 or 5% or something like that increase in
Okay.
price.
Gotcha. Okay. And, as a lender, a lot of my investors tell me, oh, I got outbidded by 10 or 20 grand. I'm going to share my thoughts with you. Tell me what you think, John. So I tell my investor, you stood to make 80 grand on a deal and you got outbidded by 20. I'd rather have 60,000 in my pocket than nothing in my pocket. Or if you were going to make 50 and let's say you got outbidded by 30, by 20, I'd rather have 30,000 in my pocket than zero. I mean, what are your thoughts on that? Because a lot of these people are working with emotions. I got outbidded. Of course, if it's eating drastically into the profits, into the margins, of course, don't do it. But when it's only 10, 20K, what are your thoughts on that?
So honestly, it just depends on the property itself, and like the workload that like we're taking on. With the way the market is right now, we're not really looking at too many full gut renovations or anything like that. Like we're trying to get in, get out, be done with it. Because the thing is that, like, we could churn out a lot of these and either keep them as rentals or flip them and like make a big profit. So like you just got to think of the value, like as a first time flipper, or like have it, like having a little bit of experience and doing a couple, that's great. But like right now I have 11 properties that I'm working on. So like unless this full gut is making like 150, 200,000, like it might not be worth our time. Like
But
so me, what I mean by that is that like that's why I would have those really low ball bids where like uh if I lose out on it, great, like I have other projects I'm focused on anyway.
okay. But just to generalize my question, if you stood to make, let's say 50, 60, 70,000, and you were getting outbidded by, 20,000, 25,000, would you still consider the project being an avid investor with 4 years in?
I guess I didn't clarify it. So like if it was like a full gut and I'm only making 50, 60,000, like, so then it doesn't really matter to me because the time, like as far as, like my time to focus on that project versus like, I can make 50, 60K on a project that I literally put on the market, like it's just like that Elizabeth project, I probably spent in total an hour and a half of my time. And a majority of that was signing contracts to purchase and signing contracts to sell.
And how much did you make on that one, if you don't mind disclosing it?
So after all expenses, yeah, probably about 60, 70 grand.
Nice, nice. Okay. So what John is saying is very important here. It's also your time, not just the money, your time worth it on a project for that 30, 40, 50, $60,000 profits. It's a good insight to share.
Now if it's like a cosmetic flip, then yeah, that's worth it. But again, like if it's fire damage, you have to do all new framing, new sheetrock, new HVAC, new electrical, plumbing, you name it. Then also depends on the township too. Like if it's East Orange, then I'm not even going to look at it because East Orange is probably one of the worst townships to deal with when it comes to their inspectors. So, and I know that from experience doing a pretty much gut renovation.
Uh-huh. Got it. Got it. Okay. I guess we'll go to Q&A now. There's one question here. We will open it up. I'm 21 years old. I have about 30,000. I want to invest into real estate, specifically rentals, but honestly, I'm just lost and don't know how to start. Any ideas or suggestions?
So I guess
How-
the first question I would ask uh, the attendee is if they own their own home or what's their situation. Do they have a steady W-2 income? Like if you do, then I would probably go for an FHA, and buy a multifamily, like somewhere between 2 to 4 units. You only have to come up with 3.5% down, and it gives you your first touch in real estate. And not only that, but the interest rates are pretty low right now. Or you could go with a VA loan if you're a veteran, so you don't even have to come down with any money out of pocket except for closing costs. So
Okay, yeah, he mentioned he's 21, so you're saying his house hack, buy a 2 to 4 unit, let him live in one and rent out the others, because you'll put down 3%, which is good, and you'll learn how to be a landlord at the same time too, and see if you could, how do I say the words? If you could live with this everyday grind being a landlord.
yeah, exactly. I mean,
Not easy,
that's
not
the
easy.
first
But
property I did. So
Right. But if you're not looking to house hack and you're looking strictly to invest for flip profit, maybe you want to consider wholesaling in the beginning because 30,000 is not a lot of money today to get started. 10, 20% down on a flip deal. What's the average price in Jersey? 250?
yeah, I would say probably around that.
Yeah, 250 times 10, 20%. So you need anywhere from 25 to 50K plus closing costs. So I would suggest, my opinion is maybe do some wholesaling first, find some properties, find some buyers, make some quick money, 5, 10,000 in each deal. And then maybe you can get enough money and start doing your flips. And then from flips, you can go into, in a few years later, maybe some multifamily projects. So I
Yeah,
hope it answered your
I
question.
mean, another thing I would recommend there is potentially partnering with someone who has a little bit more experience,
Great
because
idea.
you may have a little bit of money and you might have more time than the person who is experienced. So you could be there day to day, making sure that the contractors are doing what they need to do, and someone may be willing to partner if you bring the deal too. Like if you brought the deal and you're like, hey, I have 30K that I could put into it as well, then I would definitely be interested to partner.
Exactly. So just to reiterate, I'm sorry, just to exemplify a little more what you're saying. If you got the cash, maybe go with a partner who's got more cash. Maybe go with a partner who's got cash and experience. Experience gives you leverage, which means more advance at the time of closing, less deposit, less risk into a deal. And if you got 30, 40, 50K, maybe you could do 2 deals instead of just 1 deal and maximizing all your money into one project. So that's a good thing also to note also. Anything else you could recommend, John, to our audience?
Sorry, I was just reading in the chat. Vanessa was asking, how can I continue to grow my portfolio if I don't have additional funds? Currently at 18 doors. I mean, like I was saying, partnerships are definitely key because like when I got started, even my first flip, I had $0. I found the deal. I called over 100 people, like literally called over 100 people to fund it, and randomly one day, like a colleague of mine and I helped him run some comps real quick, and then he partnered with me on that first project. Then he partnered on the second, and then my contractor partnered with the one that I was using for that first and second one, partnered with me on the third. And then after that, because of my social media presence that I was posting a lot, someone else brought me another deal, and then I partnered with them, and because of the money that I made from that, I put that into the fourth. And then because of that success, my one of my best friends partnered with me. Like literally, I only own, of the 40 plus units right now that I own, I think I only own 1, 2, 4 properties by myself. So realistically, partnerships could definitely get you a lot further.
So it's not what you know, it's whom you know.
Exactly.
Right. And I like to say also networking is very important, whether it's these webinars, live events, anywhere you're going out there, expos, because when you're networking, it's an opportunity, and that opportunity is to grow your company by calling the people the next day, seeing how you guys can work together, whether it's partnership, lenders, title, insurance, whatever it is. That's all, it's whom you know to get you where you need to be. And that's awesome because you started out with nothing, and look at you today, 4 years later, how you have nice amount of properties in your portfolio, and you've acquired a lot of assets and capital. So that's great to hear. So folks, he put out his number out there if anybody wants to reach him at the JMJ Group. I put my website information and our direct number there. Just to recap, we are real estate lenders. We nationwide, we do fix and flips, buy and holds. We're not credit sensitive. No financials are required. Give us a call. We could dissect the deal for you, not just provide you capital. We can do joint ventures, but more importantly is dissecting the deal, making sure that it's profitable, the return on the investments are there, and we could even joint venture with you or give you guys like John, maybe that can come up with the experience to do a deal and all that. Any further questions before we end tonight's webinar? Anybody out there?
I mean, I do have one thing I like to say to
Please.
people, like now, thank God, I've been blessed with what I've been doing in real estate for the past 4 years, and majority of the deals we could close ourselves, with the cash reserves that we've had. But even to this day, I like to try to fund majority of my projects 100% with, OPM, other people's money. So this isn't, solicitation for that, but I just like to tell people you have to think outside the box and how you could do this project or how doing multiple projects, so if all these projects, like the 11 we're working on right now and the 6 that we're going to buy, if we had to come up with all our own money, then probably could only do like half, maybe even less than half of that. So
yeah, listen, OPM, other people's money, what that does is it's leverage, and leverage is key to return on the investment. And just to share some good real estate information, I want to share this. If you had 100 grand and you're going to make on a property 100 grand, that's all you did was make 100%. But that same deal, if you put down 10 grand and you're making 100 grand, you made 1,000% return on your money. So that's what it's all about. So making the larger return on your money, and the other 90,000 could work on other projects for you. So it's all about diversification, never putting your money your eggs into one basket. I've done it before. I've lost my shirt, and I'm sure other investors also started that way too. And some people, they say, "Oh, what's your rates?" And when you tell them, 8, 9%, and they think it's a lifetime. But when they're only in the deal for a half a year or a few months, it's nothing. It's only 3 or 4% you're paying on the interest rate. So when you're getting high leverage, low deposit, low risk is what it's all about. But a good lender is going to provide you with the economics, showing you the return on the investment with your profit margins. And we also could do with our consultative approach on where the market trends are going in the neighborhood. Is it a renter's market, seller's market, flipper's market? We could provide that totally free out there for our clients and investors. John, it's been a pleasure. I hope we could do more of this. I love always engaging and learning from other people out there, and you especially. You've been very informative, and I hope we could do this again. Just anybody have any more questions before we end this panel? Nobody else? Great. Celeste, thank you for that comment. Very appreciative. Okay, I want to thank everybody, and I want to thank you, John, very much, and have a great night.
Thank you, Marty. I appreciate it.
Okay, take
Have a
care.
good one, everyone.
You too. Bye-bye.